Hello, gentlemen, and welcome to another Pallavi Market Research video. Today, we're going to be doing more of a macro outlook. We're going to be discussing the macro economy at large, specifically through this lens of Bitcoin, bonds, and the future of equities. Because as we have seen over the past 24 hours or so, Bitcoin is breaking through these levels that it's had a lot of resistance breaking through over the past, 6 months, we should say. And despite what you're hearing on crypto Twitter and all these other things about the dollar and the strength of it, it's nonsense. The US dollar is strong, not kind of strong, really strong. The United States government did an amazing job exporting its inflation to other currencies, to other bond markets, to other everything. Now, what we're going to see is a lot of very interesting reactions in the marketplace because what we're seeing is that the market is pricing in a Trump victory already. We can maybe make the argument that Bitcoin is doing that right now. But the key point is what is going to happen irrelevant of an outcome in the election. And one thing that seems to be clear consensus is that we're going to have a larger deficit if Trump wins or if Harris wins. And what you're looking at here on the screen on this chart is a net interest paid chart. Basically, the amount of interest the federal government is paying to its bond holders, to its treasury bond holders. Why does this matter? Well, as you can see, basically every single day we are reaching new highs. And what many more intelligent people than myself are identifying is that the demand for bonds, even the highest rated bonds, are lower than their respective supply. And I've talked about this in the past on this channel, and I continue to believe this, that the next recession is one that's being massively delayed. And more importantly, it's going to be triggered by volatility or, again, a supply-demand imbalance, low demand relative to supply in the bond market itself. Now, here are some more of my thoughts. Crypto, bonds, and stocks are already factoring in a Trump victory. Altcoin markets are highly sensitive to negative news right now, and that's a little bit extra dangerous given the state of the world with the amount of wars going on. Altcoins are just highly sensitive, and I want to be, as a result of news like this, saying like, hey, let's start the party in the altcoin market, right? But we have to wait and see. I think that we have to wait till end of November, early December to really have a signal, green, yellow, red, on what to do there and how to participate. Stocks are becoming way too pricey from a risk-reward perspective. I've been feeling this way for the past 60 days or so, maybe 90 days, that stocks are just climbing, and there's so many stocks that there are only, how do I say this? There are only so many stocks that are worth owning. And all of those are just appreciating at levels that where just a basic risk reward on participating further in the short to medium term appreciation of that underlying business is not intelligent. And I'm not alone in this, and I feel very strongly in that. So if these stocks fall, then large cap cryptos are likely to follow in the short term. And I think that stocks aren't going to fall precipitously, but I do think a 10, 15, 20% correction in the next recession is going to be likely. And this brings me to this next point, which is maybe the most important point of the whole video. Goldman Sachs is predicting a lost decade approaching for stocks with only 3% annual returns. So let me reframe this. I believe that so much of the equity appreciation that's occurred over the last 18 months, 2 years or so, is pricing in a lot of the, like we talked about in this channel in the past. So what is the difference between asset appreciation versus asset inflation, right? So I do think that there's been a lot of testing on I really think that the equity market is pricing in a lot of its future returns at this current moment. And that is why the next decade for stocks isn't going to be so amazing. Because what I see happening is we have that 15% dip or so. Then it starts to climb back to those, the current all time highs. We try to fight back for those all time highs over the next 5 to 6 years. And then we pass them a little bit. And that's what, where Goldman Sachs is getting this 3% annual return figure from. Something that resonates with me. And so what this leads me to believe is this will make dividend paying stocks more important as your reinvested dividends will begin to account for more and more of your overall return over the next decade. So if you are looking to participate in stocks, you should be looking to participate in dividend paying stocks because the majority of your return is actually just going to come from reinvesting those dividends. Now, let's continue this. If Harris wins, bond yields are likely to come down significantly. One thing that not enough people are talking about is Paul Tudor Jones and Stanley Druckenmiller, two beasts, have dedicated 20% of their portfolio to shorting bonds because we are in a trendless range at the moment. Okay? What does a trendless range means? Well, we just don't have we have a lot of historical data when it comes to bond prices, and really a trendless range is just, hey, we don't have a trend line where we don't have a historical trend that we can overlap on the current trend. And that means that something really out of whack is happening. So that's why Paul Tudor Jones and Stanley Druckenmiller have around 20% of their portfolio shorting bonds. And that, again, gets back to my previous point earlier in the video that the next recession will be triggered by the bond market. Okay, so the Fed's 50 basis point rate cut raised long-term rates much more significantly than everyone else was expecting. That touches on the previous point. If we have unclear election results, which is very possible given the nature of the election voting process at this time, in some of these states with mail-in ballots, all these things, we might not have a clear election result for over 48 hours. And if that happens, then we're going to have severe volatility across all markets, in my opinion. Not for sure. I do believe that this election will either be something that we understand who wins really quickly, or it takes 3-4 days to figure out who actually won, which could be really scary in the short term for markets. So if you're playing with leverage, don't. Yields are likely to find a landing point following a Harris win, likely to remain uncertain following a Trump win. This is something I heard a few people talk about, and I find it very interesting. Yields, what do I mean? Like Fed interest rates, bond yields. We don't have there's this great, a lot of these higher level fund managers, they talk about these landing points, right? These landing points where, certain things become clear, like the risk reward perspectives on various asset classes, especially in the context of bond markets. So when we have an efficient market, all these other things, we are looking to find that landing point where bonds are actually attractive in real terms to real buyers. Okay, we're getting close to the end here, guys. Don't worry. Buyers of top-rated AAA-rated commercial mortgage-backed securities are suffering losses because commercial real estate, namely in the office sector, is performing worse than their current ratings would suggest. What is this saying? This means there is top-rated mortgages that include assets in the office niche of commercial real estate that is not high quality real estate at all at this time. Okay? These mortgage-backed securities are slow to reevaluate the quality of the assets that are in them. We learned that in The Big Short, right? So this is another reason why bonds are failing and just not performing well. And there are probably going to be people who bought AAA rated mortgage-backed securities who are not going to get their principal paid back, which is a scary moment, actually. All right. We are entering a highly liquid environment coupled with a dovish Fed. This increases the probability for more pressure on commercial real estate, namely office, volatility in equities, especially over the next, call it 2 to 2 years, 2 months to 2 years, a steepened yield curve, appreciation in Bitcoin, gold, and silver, and maybe even easier access to better terms in venture. I do think that one of the weird things about this moment is I think that the supply of venture capital relative to the demand that excuse me, the supply of available venture capital relative to the supply of businesses that are worthy of taking on that capital is not really in equal standing to one another. I think that there's going to be a lot more supply in venture capital looking for businesses than businesses ready to take on that venture capital. So something to consider if you are an early entrepreneur looking to raise capital from a venture fund. And if that is you, then feel free to DM me. I'm more than happy to consult and to help you guys come up with good deals and to connect you to my network. Now, final thoughts. We need to train ourselves to become paranoid when asset prices are high and excited when asset prices are low. Right now, asset prices are high. Maybe not Bitcoin in relative terms over its next 5-year window, but for the most part, we can be very safe to say that asset prices are high. We should be paranoid right now. And when they're low again, that should be a moment of excitement, okay? Because you want to buy low and hold forever, right? Now, next point. Prioritize bold long-term moves in Bitcoin and silver. This is like a very clear one to me. And or prioritize buying boring, high growth, dividend paying stocks that will disproportionately benefit from nuclear and or robotics. This is not something I've talked about a lot on this channel because it's very saucy, but I will leave you with this. Imagine I own a gold mine, silver mine, tungsten mine, any type of mine. And my biggest cost is labor and just like equipment, raw equipment, right? Imagine for a moment that my my gold mine now has robots working 24/7 mining this mine. What are the efficiency gains of that if you have a 24/7 gold mine that is operating because you have robots now doing the work? And I do think that that's one of the areas where robotics is actually going to be the most helpful in terms of manual human labor is just basic mining. Where, think of how many mining shafts there are where they're pumping in oxygen and cleaning it out and all that, like where none of those things are useful anymore. So there are very boring businesses, maybe like a mine, where robotics and nuclear are just going to improve the overall enterprise value of those businesses to such a significant degree. It might lead to the consolidation of businesses like that, meaning like one of the mining operations may make that capital investment into these robots faster than the others, and that leads them to being able to raise capital to buy up all these other smaller mines and to deploy their robots effectively. These are the opportunities that interest me. I'm not super interested in, Bitcoin, to be honest, right now. I'm more interested in how do I own a business like I just described that pays me a dividend, and I can invest those dividends for 3 to 4 years. Once the stock price has tripled or 3 to 4 times X in that period, and I've been investing my dividends during that growth, and then I have a business that I can sit on and just hold for the rest of my life, and maybe I use loans to power that further. These are the moves that I'm more interested in contemplating right now. I think that that's actually where there's more wealth creation versus because realistically, what happens to Bitcoin? Bitcoin goes from 70,000 to a quarter million, crashes again. So that's a trade, right? You're speculating. You're not getting cash flow. What are your goals? I don't know what your goals are. I'm not a financial advisor. Haven't you noticed? Haven't you noticed that I'm just talking out of my ass all the time, and that none of this is financial advice? And I'm just doing my best to have fun and entertain you guys and educate you guys on ideas. Um, yeah, I think that'll work. That'll work. All right, guys. What a fun day it is. Rainy day here in Puerto Rico. Woo! Yeah. Any questions you guys have about this video? Ask them. I'll talk to you guys later. See ya.